All right, guys, so here's your monthly marketing report for July of 2021. So I am curious what you guys think about the 80925 market. Hold tight. Trace is going to give you guys all the updated information.
If you are looking for information on buying, selling, managing, or renting a home, we'll show you all the tips, tactics, and secrets that will best ensure your success. So let's get started. Hello, 80925. Real quick, let's go over July's numbers for the housing market report. So July 2021, we're going to cover everything for 80925, just strictly this zip code. Now, the numbers will be a good bit smaller, obviously, than Colorado Springs overall, but we will include Colorado Springs at the end of this video or a link somewhere around this to make sure you guys can compare and see what 80925 is doing in comparison to Colorado Springs as a whole. But we will be getting into 80925, comparing it to previous months and even previous years to see what the market's like, and obviously trying to identify a trend so we can better forecast things. So who would this be for? If you currently own in the 80925 area, you're definitely going to want to check out this information. And if you aspire to own in Colorado Springs, maybe 80925 is in the wheelhouse for you as far as areas to consider. You're most definitely going to want to check this out because this will give you some insight to potential challenges that you may see when trying to purchase in that area. So without further ado, guys, let's get into it. So median price for 80925. 427.5. So this is actually pretty good. Colorado Springs, I believe, for the month of July was around the 440 mark. If I'm not mistaken, don't quote me on that. Check out the video afterwards. We've done a few areas now, and so I may be getting the numbers transposed. So let's focus on the numbers we have here. So 427.5. Now, that's actually a 20.4% increase from this time last year. So we took July 2020, and what was the difference between July 2020 and July 21? And that was a 20% increase, or just a little bit better than 20% increase from year to year. So now I will tell you just a little bit of insight on that. When you're doing those financial calculators and everything, and most of the time you see appreciation. Now, granted, that's appreciation versus median sales price, but you could see how they're in the same. They're in the same category. You know, one rises, the other one's generally going to rise. But 20% increase. Normally on those financial calculators, they have like 3% factored in for appreciation. Here, you know, considering that they're in the same category, if you will, 20.4% increase. So you can see that's definitely much higher than what you would consider average or normal. So what does that look like as far as a 12-month trend? Where are we going? Well, this actually isn't bad news. It looks like it stepped off a little bit. It looks like it went down like $2,000. But that's not bad. This is some leveling off right here. And much like the stock market and everything else, sometimes you'll see some retraction or consolidation, and then you're going to see some movement up again. But this isn't alarming to me at all. I mean, ideally, can we have it keep climbing and climbing and climbing? Well, yes and no, because eventually you're going to be pricing out home buyers. So really, this is actually a good number because you have appreciated and built equity just by owning the home, much less paying it down each month. So you still see your equity piece climbing, but yet you're not pricing people out of the market. So that's not alarming to me at all. That's actually just kind of showing to me, as far as my personal opinion, I feel like that's just showing some leveling off, and you may see a little bit of bumping back and forth. Because again, remember the median sales price and how we're factoring that is we're pulling that data from the MLS, and all we're doing is July and in 80925. So we're just strictly looking at the average sales price for the month of July 2021. So you may see a little bit of bump of the roads there as we move forward. So let's look at a broader picture of this. So like a 5 year. So let's look at each July for the past 5 years. And you can see there's been incremental changes and then larger, and then a pretty expansive gap right here. Now I know there's new builds in the area. And they're constantly building out and developing the area. And as you do that, you're obviously going to see more sales. It'll increase your numbers. And then this is actually true. From 20 to 21, we're seeing a pretty dramatic increase, whereas each of the others seem somewhat incrementally, you know, I wouldn't say identical, but close as far as from year to year for previous years, from 17 to 18, 18 to 19, 19 to 20. But then from 20 to 21, you're seeing a pretty sizable jump. That's going to be, you know, obviously across the board. We're seeing that in any market that we're doing so far. So that's going to be true for all of Colorado Springs at this point from the areas that we've actually done. Now, inventory. Now, this is the magic right here, because this is where we're at. And this is, you know, for the home buyers out there or those that aspire to own in the Colorado Springs area or even the 80925 area, this is really what's going to help you determine what are you looking at. Well, you're seeing more homes sold than listed. So there's going to be a couple things for that. And forgive me if you've seen previous marketing videos, you're gonna hear this again, just so we can make sure that everybody that's watching understands. So these actually look inverted, but they're not. And like we say down here, we're pulling all this information from the MLS. So how can we have more solds than listed? Well, a lot of times new builds don't actually put the listing in there because they don't even scratch dirt before they have a contract, and there's actually waiting lists out there, and many of the builders are having to deal with waiting lists and putting people on hold before they even scratch dirt or even sell them a lot. So they're not actually putting them on, on the MLS as listed, but yet, when an agent sells or assists somebody in a new build, a lot of times they'll actually go in and put in the home is sold, so it accounts for the numbers and everything, not only on their business but as an overall. So that's how you can have some inverted, and plus you can have some straggling from maybe it was listed for the previous month but then closed 30 days later in the following month. So there's a few variables in there. But the main thing is you're just seeing that, man, the inventory is getting snapped up so quick. So what does this look like in comparison to the past 12 months? Well, you can see the volatility. And guys, really this, a little bit of volatility right here, it's hard to decipher anything outside of COVID right now. That kind of masks every kind of potential issue or variable, if you will, that's out there. And not to say that COVID's the only thing that's having this go up and down. You're going to have the new builds, which is going to put more on the market. You may have a gap in between one phase to the other and that kind of thing, or a dry spell of maybe, new developments not up and selling yet, and then they are. So that is really, this doesn't alarm me just because you have the COVID pieces and you have the new build factors out there. In the end, what you're looking at is throughout this whole thing, you're showing more sold than listed. The black bars on the bar graph here represent the sold, and the white the listings. So you can see this is not uncommon for 80925. And being a relatively new developed area in comparison to some of the other areas, this is not surprising at all. You're typically going to see more sales than listings because of that, for the same reasons we're talking as far as the median price and such. So now the inventory, that 40,000 foot view, that 5 year, you can see how it's crossed over, that they had more listings than sales, more listings than sales in 17, 18, and then 19, we inverted. And a lot of that I would write off to the variables that we spoke before, mainly being the new build. So what does that look like? So guys, I feel like you probably know this already if you're currently in this area, as far as what kind of market we're in, if it's a buyer's market, if it's a seller's market, or even if it's a balanced market, which is those couple months in between there. Well, we determine this by MSI, so monthly supply of inventory. How quickly that is consumed through the market. So meaning how much inventory you have, how quickly it's bought up. In 0.78, that represents just over 3 weeks, so 0.75. So keep in mind, anything less than 4 months is going to be a seller's market. So obviously at just better than 3 weeks, you're obviously in a seller's market. Ta-da! I mean, there it is. And I feel like if you guys are in this area, or if you've been shopping in this area, or home search in this area, or just keeping in touch or in tune with the market, this was no surprise. Quite frankly, every market that we're looking at thus far is in a seller's market. Can't remember. It's been long enough that I can't remember the time that it hasn't been in a seller's market. So, but anyways, you want to get into more of the real estate information and some of that, the reasoning and the pricing and those kind of things, we'd have you talk with Nicole or one of the team members there at Ashford. And speaking of that, we have all kinds of resources that we're constantly adding and everything else. We do have a lot of people that reach out. They want a CMA or a comparable market analysis on their home without all the sales pitch. They just want to kind of track their assets. After we've started doing these videos, we started getting requests for those. Just so you guys know, they're free and there's no strings attached. We're not going to send the hounds at you and everything and hassle you just because you want to know what the value of your home is. It's likely the largest asset you have, and it's kind of exciting with the numbers and the stuff that we're hearing on the street and in the news as far as the local housing market, which I have to say varies from what I'm seeing on a national level and then other markets. We're still very strong here in Colorado Springs. So congratulations if you're looking to buy in the area or you currently own. But if you're wanting more information as far as your home, the value of it, that kind of thing, and you're wanting that without all the sales pressure and all everything else, let us know. Just shoot us an email with your address and maybe some of the upgrades and stuff that you've done. If we have some questions so we can make sure we get that data for you, we'll just simply email you or text you, whichever you prefer. And then if you'd like to talk more about it, then let us know. But at least you're armed with the information and not have to feel like you have to go through sales pitch to get the information. So anyways, all right, guys, hope that helps. If you have questions, let us know. Fill out the comments, shoot us an email. We're here for you. Until next time, cheers, guys.